Good afternoon, everybody. Welcome back into Mining Stock Daily. Got a corporate update here today with Revival Gold and CEO Hugh Agro. Revival Gold trades on the Venture Exchange with RVG and on the OTCQX with RVLGF. This week, the company put out its preliminary feasibility study for the Bear Track Arnett project there in Idaho, along with an updated mineral resource estimate on the project. Hugh, so it has been, this was a highly anticipated technical report. You and I have been talking about the report leading up to it for the last couple of months, so it's got to be somewhat of a relief to get this off your back.
Oh yeah, it's a big accomplishment, big de-risking milestone, and the team's really excited about the outcome.
Yeah. Okay. So we'll talk about the resource estimate, and then we'll get into the economics of it. But the resource, there was improvements, both measured and indicated and inferred. Kind of walk us through some of the highlights you want listeners and investors of yours to know.
Well, the first thing is it's a big de-risking step. We had focused on infill drilling, and we've achieved a lot here. 2.5 times increase in the measured and indicated heap leach resource to 1 million ounces, 3 times increase in the underground resource, and a 33% increase in the grade of that underground resource. We're now up to about 900,000 ounces. Of course, both these deposits are wide open. Total resource 4.6 million ounces. That's up 600,000 ounces since just over a year ago. And this thing's going to continue to grow. We're open in all directions, as I said.
All right, so 4.5 million ounces, pushing that. Everybody wants to see 5. It seems like it's like 5 or 6. You get to that tier 1 classification. Some people say, depending on size and grade. Obviously, we'll chat about that later. But tell us, where do you add those ounces? We've expressed some of your exploration potential here in the strategy for this year, but where are you going to find those extra ounces to get over that 5 million ounce mark?
Well, yeah, I mean, I would hasten to jump in here and say at $2,000 gold, we're already at 5 million ounces, and also mention that this is the second largest new discovery of gold in the United States in the past decade. So we're definitely on the scale of being meaningful. But the question regarding where do we add ounces next, focus absolutely is on high grade oxide, heap leach, and open pitable material. And in fact, we've resumed drilling this week and are busy with 3 targets on the Arnett side of the project. That's the western side of the project, as we look to take the mine life out from now 8 years of proven and probable reserve, another year or 2 of inferred, to perhaps another 2 or 3 years beyond that.
Okay, so looking double-digit mine life, that'd be nice to see. So let's talk about the technical report of the PFS. A pre-production capital cost of $109 million. You don't see a whole lot of projects that low of capex here, Hugh. So that I would say that's a pretty big highlight. But I do want to ask you one question that I had for you is looking at there's variables between your total cash costs of $986 per ounce and your all-in sustaining costs of over $1,200 per ounce. It's a pretty wide margin there. I'm just kind of curious if you could explain to me why those margins appear to be pretty wide.
Yeah, we do have sustaining capital. Of course, all operations do. And in our case, most of that sustaining capital is to do with the fact that in year 5 of the operation, we take a haul road out to the Haiti satellite pit and bring that into the mine plan. Of course, that is an important investment for us because all of our expansion potential in oxide open pit material is on that side of the property, and that haul road will be used, I'm sure, well beyond the 8-year mine life contemplated in the current proven and probable reserve. But even with the sustaining capital associated with the project, that $1,200 and some odd per ounce all-in sustaining cost ranks very favorably relative to any operating heap leach mine in the United States. In fact, we're in the lower end, if not the very lowest end in terms of heap leach projects, with all-in sustaining capital at that level. So I think this is a very competitive project. You mentioned the initial capex, again, very competitive, roughly $200 an ounce. By our numbers, any of our peers are higher than that, and that's a function of the fact that we've got that existing infrastructure that we can redeploy. And I'll add to that that not only is our capital low, so the intensity is low, but it's also of a variety that makes it low risk, because instead of building roads and doing pre-strips and other earth moving activities, all of our or most of our capital is associated with mechanical equipment, and lenders love that because it's movable, and in a worst case scenario they've got great security. That's not the same case with a big pre-strip operation, or one that doesn't have a power line and a road already in.
The NPV with that 5% discount is $105 million after tax IRR 24.3%. That's using an $1,800 per ounce price of gold. I want to share. So some peers of yours in Idaho not too long ago used $1,700. This was last year, a little over a year ago, and there was some pushback on this on $1,700. But since then, a lot of other companies have been using $1,700 in these technical reports. I think this is the first time I've seen $1,800 as a base case. Tell me why you and your team decided $1,800 was a good base case price of per ounce of gold in this report.
Yeah, this is guidance from our QPs, right? And there's a formula around how that's estimated. Of course, spot price today about 1950, and generally for proven and probable reserves, the approach is to take a 3-year look back. So we're certainly above that at $1,800. But I should point out that our reserve, I should say, and our pit shell was designed at $1,700 gold. So maybe that's maybe that fits better with what you've seen from some of the past work of our peers. In the current environment, I think it's fair to run the economics at $1,800. And again, we follow the guidance of the QPs on that. I think it just generally talking about gold price and gold price assumptions. If you have a long lead time greenfields project, it's probably appropriate to go with something a little lower price to take into to account for a bit more conservatism in a greenfields project, in a project that might not be in production for quite some time. In our case, because the site is so well known, the risks elsewhere in the project are so low. I think we can comfortably work with $1,800 for our economics. And as I said, pit shell, all of our cutoff grades have been done at $1,700.
Okay, very good. So this is where companies there's added administrative work here, because this is when companies begin not only more exploration work to add to the economics of this PFS, but a lot of companies also go down the road for permitting and preparation for potential financing of construction and actually beginning to mine. So now that this report is out, Hugh, what is the strategy? We know there's an exploration strategy and a drilling strategy this year, but what about the permitting process is the company willing to take now that this PFS is out?
Well, we've already started that. We're on a permitted plan of operations right now, and we've been working on re-permitting. We started our supplemental baseline data collection a year and a half ago, almost 2 years ago. So we're already walking down that path. We're doing it as efficiently as possible, and we'll continue to do that. I think over the next 3-4 months, we'll work with our consultants and really press on the engineering design aspects, the timeline aspects that they've recommended as part of this PFS. Of course, we've got a fully laid out plan that sees us right through construction now as part of this PFS, and which was presented in our press release yesterday in respect to that PFS. But we'll spend the next 2, 3, 4 months working through that with our consultants as we're drilling and as we're continuing to collect baseline data and fine tune all of that. This is a major milestone for us, and as you can appreciate, we've got a lot of interest in the project. We got a pretty active data room with corporate and large PE and family office funds that do additional homework beyond what the typical retail investor does, and so we want to spend time with those guys and spend time with our consultants and optimize the plans for 2024. And we'll be back to you with more of an update on what's in store. In the meantime, you're right, we're exploring, we're drilling. We've got some metallurgical work going on to look at the potential for shipping a concentrate from that second phase project, which is, of course, a big value add for us. And all of those results to come over the coming months.
And also, last question here, Hugh. Feedback from shareholders. What are some of the questions, praises, concerns that you've received over the last 24 hours since you published this?
Well, I think there's a lot of interest in what we're doing here. So I have been on the phone quite a bit, and
I'm
we're
sure you
busy.
have.
We've got a big site visit coming up in August, and I'm marketing overseas in the beginning of the end of this month. And so lots of interest in what we're doing. We do have a pretty flat chart right now, which is frustrating with the retail market. But we're trading at $8 an ounce in the ground. I think as people start to digest this information and see the possibility with Bear Track Garnet and what it can deliver, we're going to re-rate handsomely. There's 3 equity analyst reports that came out in the last 24 hours. Target prices of $2.45 and $1.50 a share on the ones with targets, and here we are sitting at about 40-50 cents. So lots upside in the stock, lots of recognition of the value in what we've just accomplished here, and the de-risking associated with that.
Hugh, I appreciate your time. We're going to be touching base again here, more this summer, and then as we kind of approach fall conference season. So lots more coming out from Revival Gold. Enjoy the rest of your week. Hopefully you get a nice break this weekend and not have to pick up the phone.
Good to be with you, Trevor.
That's your update from Revival Gold, everybody. Again, trading on the Venture Exchange with RVG and on the OTC QX with RVLGF.